As we stated initially, the purpose of digital insecurity is by no means to be fear-mongering or instill fear or bring people back um, into a shell, but rather to provide education and empowerment. Because I truly believe, just like the old commercials on TV, this is one of them that I'll tout, is the more you know, the easier life can be. If you know the pitfall coming up in the road, you can take another road, you can protect yourself, you can choose other routes. One example of such is in California last year during cooties, it was required that people had health insurance. Now, federally, this had been the case for a couple of years prior to that, but the federal government stepped back. California was the only state that maintained that it was mandatory to have health insurance during 2020. Now, logically, everybody's going to say, well, of course, during such a major year, common sense. But if you don't have money or a job or income or the safety net of EDD because it takes 9 months for them to get around to giving you a check, then at some point, survival is of utmost. And so we've got to learn how to balance this. But what we want to look at is along that security, California required this. And then at the end of the year, they made balance changes to the amount of money that was the maximum somebody could earn in order to qualify. So if an individual was blessed with a job, let's say November, December, that would increase the amount of money that they had earned for the year. And often that would bring them outside of the area of being able to participate in the California health insurance program. But the catch is the year had already passed and they'd already participated in it because once again, it was mandatory. And often premiums were $250 to $350 a month. It was absolutely unusable. If you went to the doctor, it could have been a $70 or $80 fee, and out of pocket before expenses kick in might have been around $2,500. Now, these are kind of cherry picking from different plans I saw, but that's the direction I saw for the middle of the road silver plan. So this was a big cost for those who went into it. What I saw though in the tax season, as I had helped people file taxes, is that a very high percentage of individuals who followed through with the law to participate in the required health insurance programs then got a penalty between $4,000 and $6,000, seems to be about the sweet spot, because they now had a job at the end of December that bumped them over. Even if it's just a little bit, if they didn't qualify, then they had to pay it back. And it was huge, the amount that some families had to pay back. And when you're already digging a hole because you're scrambling for a job, or maybe you found a job, but it's now contract work without benefits or lower pay, that's not an expense that we expected. But the reason I want to go here now is with that going on in the personal world, we know that the stock market is inflated like a helium balloon because there's no way during a global shutdown that all the companies would continue to rise forward. Now you say all, no, you're right, not all of them, but that's the highest stock market we have ever seen on this planet. Now, there's some companies that really shined, like the big box stores that were allowed to open with thousands of people inside. Meanwhile, a mom and pop with 2 people had to close. But there's enough balance of shutdowns of manufacturing and shipping and all these different areas of society that came to a screeching halt. That doesn't equate to what the stock market is showing us. So as we look at the helium that's inside that balloon, I want to talk about another subject today. Now, Bank of America was the exclusive contract for EDD, and they want out. So let's skip forward and I'll come right back to that. Bank of America was asked back in December why they're draining EDD accounts, and they left questions unanswered. If people reported fraud because the money was stolen, even before they got their card, the money was drained. Bank of America did nothing except for shut off the accounts and mark the victims as perpetrators and would not help them. Bank of America states that they lost over $200 million in fraud activity last year. Well, that's better than California if we want to go for better or worse, because California claimed it was something around $33 billion in fraudulent payments that got paid. And again, we want to shift the ownership where the ownership is due. If you're shoveling out that much money, whose responsibility is it to make sure that you're actually giving the money to somebody who meets the criteria? Again, over $30 billion. So if we move back to Bank of America, we don't know the depth of the loss, but they had claimed early on about 200 million. So we don't know again how deep beyond that is right now. But it's just been one issue after another. I want to also point out the Bank of America, being the bank of the people, they hold all the EBT cards. They hold, of course, the unemployment. So any really social benefit would go on a card now because they don't send checks or cash. And then this card is issued through Bank of America. Silicon Valley is one of the largest areas in the United States. And if we specifically look at the city of San Jose, it has way over 1 million people. In fact, it had over 1 million during the last census, so we're waiting to hear what it's increased to. But it has a much larger population than what we've seen in San Francisco. So my point is San Jose's boundaries encompass a very good chunk of society. And yet Bank of America, the bank of the people, stepped forward and closed 100% of their branches in San Jose during the year of last year, where they were the bank of the people. Every single one closed. You had to leave the boundaries of San Jose. The closest one from San Jose for us was Campbell. But the point is, you had to leave a major city with over 1 million people that Bank of America has served for years because they closed down every single one of their branches. What kind of experience is that? Now, if we go back to this article that I pulled up here, this is again Michael Finney, and we'll notice this is just coincidence that these happen to be the ones I clicked on, but these are ABC7, and they did a lot of reporting through the year to help individuals get their funds back. But in this case, Michael Finney is an investigator, and they try to help people who've lost their money. Renee Curry is one of their producers, very, very sharp individual, really goes deep in researchers and has a heart of gold trying to solve the problem. I could just imagine the level of her frustration here by July. But this article was written just this past week, and Bank of America says it wants out of the embroiled unemployment benefits contract as EDD renews it. So this is something we have to understand. When you do business with the federal government, many people respond to that as the trough, right? You walk up, you just money flows to you. And for many years, that's been the case. It's been a lot of scrutiny, but people learn the games and there it goes. However, Bank of America has benefited for, I don't even know, probably over a decade at least with these EDD payment systems and cards and cashing checks and being part of that system. And now that there's a challenge here on pointing fingers, Bank of America says, hands up, I walk out of the ring. And EDD, as the government steps forward and says, nope, we have a contract, it's about to renew, and it's not bilateral, it's unilateral. That means that if I tell you that you're going to continue, then you will continue or face penalties. Now we're going to see if B of A decides to pay the penalties rather than continue. And if they don't agree up front in the news, you better know there's a whole bunch going on in the background in order for B of A to continue work with this government. But what we're looking at here is, again, bilateral versus unilateral. Typically, somebody comes up to you and says, hey, you want a job? You say, yes, what's the deal? You exchange the money, the time, the job, you know, the basics of the contract, and you both handshake on the agreement, pin it out, whatever the level of agreement is. EDD took another realm and they said, nope, tag, you're it. Hot potato. So Bank of America now has severe losses because of the handling of the EDD card from last year. And again, it was noted early on over $200 million. And I think that was back in December. Now we're up to July. We don't know the depth of how much that is. We also know that there's other struggles going on in the banking industry. And this is why this report is coming out today from Digitally Insecure. So CNBC reports, and this is Hewson, and the date published was today, and it was updated just 13 minutes ago. It was originally posted about 3 hours ago, I believe. Let's see here, 2 hours ago. Wells Fargo tells customers it's shutting its personal lines of credit. This is huge. Now they say they want to focus in another area, but let's read this real quickly. Bank is shutting down all existing personal lines of credit in incoming weeks and no longer offers the product according to customer letters reviewed by CNBC. The product, which typically gave users between $3,000 and $100,000 in revolving credit line. So this is something you would apply for once, and then it's available for you in the case of emergency. Don't you think we might still be in the midst of an emergency? And what I would love to know is how many people used that over the last year and a half, and what the numbers have tallied up to on the shoulders of Wells Fargo. That would be the reason why they're shutting this. That, and we are at a crack society right now with the economy going this way and that way. This is a heads up, everybody. The tide is turning. So this line, of course, was pitched as a way to consolidate higher interest credit card debt and pay for home renovations or avoid overdraft fees on linked checking accounts. With the latest move, Wells Fargo warned customers that the account closures may have an impact on your credit score as well. So isn't that great? We'll also note that a number of individuals, Wells Fargo was one of the banks who did this during the last shutdown. I haven't had confirmation that they did it during this economic crisis, but what they did was they helped out their customers, and I'm doing air quotes, because they put them in the, I'm blanking on the status right now. I'm sorry. I think it was a furloughed status or temporary status, whatever that status is. You can not make payments and not deferment. Yes. So thank you for that. Deferment status. So Wells Fargo put their customers in deferment status during the last economical downturn and didn't even tell them. So what happened was customers continued to make their mortgage payments in this case, and they made them, never missed a payment. And yet when they went to check their payment, their credit score, it had been docked because Wells Fargo had put them in deferment. And so if you're not taking payments, then it's not showing up as being paid in the credit score, and therefore the credit score drops, even though the individuals were making payments, full payments, and making them online. Well, we've already heard that a number of lending agencies, and I don't know if the main banks are doing this, but a number of lending agencies did this last year. So check your credit report and see whether or not you are a victim of this one. What they're doing is tanking credit scores, because as credit scores go down, interest rates of lending go up. You can only squeeze a turnip so many ways, and they're figuring it out. I want to do one more point here as well on this line of credit for those of you who might have had one. What I understand is the lines have been shut down. However, if you owe money on it, that doesn't disappear with a magic wand like our president likes debts to go away. What happens is that now sits as a converted loan that's closed. You can't draw down any more money on it. A fixed interest rate is attached to it, and then it's paid down like a normal loan is what's going on with that. So again, I want to ask the question, if you've got America's Bank saying, hey, tag, I'm out. I don't want part of this government contract, after suffering severe losses, and the PR hit must have been outrageous for them. And now we've got Wells Fargo saying, hey, I'm backing away too. We're closing the opportunity for the people to dip in and grab more money. Where are we right now? Are we on the verge of bank collapse? Again, this is not about fear mongering. This is about opening your eyes and opening your ears and just taking an opportunity to understand how secure we are. Are you ready for the next shift? We all know the economic system in the United States, just like the world, goes on cycles. In Silicon Valley, it's typically a 7-year cycle. Sometimes it stretches to 8 years. We're way beyond that at this point. We're almost to where it should have cycled for a second time, and we haven't had that. So when one of my favorite sayings from Warren Buffett is, when the tide goes out, you find out who's swimming naked. And everybody, I think it's nearing time for the tide to go out. Make sure you're not swimming naked. Get prepared and educate yourself along the way. All right. This is Digital Insecurity, talking about the strength of the banks.